What's the difference between a residential loan and a commercial loan? That's what I want to break down for you today. Hi, I'm Tim Diesel and I'm a commercial real estate consultant. This channel is designed to give you tips and strategies in your business to help your investment career grow. If you're a broker, this will definitely help your client's career grow as well. All right, so when you're getting a loan for a property, if it's a single family home, they're more interested in the borrower. That's what they're looking at. How strong is the borrower? When you're obtaining a loan for a commercial building, they're more interested in the building. That's their number one thing they look at. So that's the first big difference between commercial and residential, right? They're looking at two different pieces of the puzzle. All right, so the next big difference is if you're buying a single family home as an owner, it's different than buying a commercial property as an owner, right? Because if you're buying a vacant warehouse and your business is going to operate out of there, you're an owner-user. So in the commercial world, that's kind of owner-occupied in a way, right? Whereas in a single-family home, if you're owner-occupied, you're going to be living there. Now, you can also get an investment deal where you put 20-25% down, you're going to rent it out maybe, or you're a flipper of some sort. Same thing in commercial. If you're getting an investment loan, typically 20-25% down, and you are going to be buying maybe a retail building and you're going to not operate business out of there, but you're going to be renting to the tenants. Now, that would be two different simple ways to break it down. So they both have the same thing, but it's a little bit different. All right, so the next difference is there's many more programs and many more lenders when it comes to buying a single family residence. It's just the way it is. There's more houses out there, there's more buyers, there's more lenders that offer that type of financing. Now in the commercial world, to buy, let's say, an apartment building or a hotel or something like that, there's just a handful of lenders that like doing it. Now everybody will tell you check your community banks if you want to do maybe a multifamily loan. Check with certain banks that do retail loans. That's all great. It just depends. Sometimes their appetite is just not there, and you really have to see what's available to you. The thing I like about commercial loans is you can get creative. You can do a seller carry second much easier, whereas in the residential field it's almost non-existent. You really cannot do that sort of thing. Sometimes you can get away with 5% down, maybe even 100% financing on a single family residence. Where a commercial property, it does require more money down, and 100% financing, I really haven't seen it done. I don't want to say it's not possible. But even SBA loans, if you're going to be doing a loan to buy, if you're putting your business into a vacant building, that's about 90%. But a lot of times there's creative ways to do it. And you can have the seller carry back a second very easily. They can use collateral from another property that you own. So it really opens the doors, lets you be a lot more creative in the commercial world. A big advantage that commercial has are a lot of the loans are assumable. This happens a lot. In residential, it's almost non-existent. I have had a case personally, which was years ago. I think it was FHA. I don't even know if they do that anymore. I could be wrong. I haven't done quite a while. But I do know the low down payment with a residential deal really can be offset with assuming the loan, all kinds of creative things you can do in the commercial space. So that does open the doors for you a little bit. Also, to get a really good deal on a residential loan, you need to provide full documentation. That is your tax return, your last 2 weeks pay stubs, your bank statements. Very intrusive process. I mean, to get a loan, it's ridiculous. The paperwork is just out of control. I have heard they've made it a little bit easier. There's like limited doc and no bank statement. But the interest rate like doubles or something outrageous. I don't know, I could be wrong. I do know that maybe 7-8% you can get a really high interest rate. Compared to going full doc, which would really be, I don't know, a couple points over prime. Now, if you're going commercial, a personal financial statement, that's what's more of their version. I have done a couple of loans with no tax return, so that's not always mandatory. But your personal financial statement, they're more interested in the property. They want to know a little bit about the borrower, but they're more interested in the property. Residential loans also have a pre-approval in one day. Sometimes they can get you a pre-approval letter in a couple hours. Whereas on a commercial property, you really can't pre-approve anything because it doesn't matter how strong the borrower is. It's based on the property. It takes oftentimes 10 to 14 days to get a good loan commitment. Lender cannot get you approved on that property that quickly. I've never seen it. Maybe it's out there now. I've not seen it yet. So getting approved on a property is much different process. Whereas buying a house, you apply today, you're approved today, your documents are ready to go tomorrow. Whereas in the commercial world, you've identified the property, you've kind of gone through it. You don't even have your loan commitment in the first week usually. I mean, it takes some time. All right, so a quick recap. If you're getting a residential loan and the advantages of getting a commercial loan. So we already know that they look at the borrower as opposed to the property. So you could be at a disadvantage already if your credit is shot or something like that. It just kind of depends. If you're an owner-occupant, maybe you're more favored, but if you're buying it as investment purposes, it's almost looked at primarily investment in a commercial deal, right? They kind of expect that. Many different programs if you're getting a residential loan, but you can get a lot more creative on the commercial side. Low down payment, could be 5, 10%, 3.5% FHA, whereas assumable loans sometimes could be a really good way to cut that barrier to entry. You can really get in there. You have a full doc, and you have a full doc also in commercial property, but it's not nearly as invasive, I found, as a residential loan. Finally, you're pre-approved in a day, and your borrower, everything is lying on them, whereas on the property, if the asset doesn't make sense, then you're not likely to get a loan. Last final bonus tip I'll give you is your tax returns are very important when you're buying a house. When you're buying a commercial building, the tax returns on the property are more important than yours. They want to make sure this thing's making money. That is the biggest thing, and it's huge. When you're asking for documentation, you're asking for a tax return, you're asking for, Schedule E, you want to get the information. You would never ask that when you're buying a house. That would almost be silly. So everyone knows it's more dependent on the property. Whereas if the tables are turned, can your buyer, who is he? What's the situation? So you're taking all the pressure off. And that's the real biggest difference right there. Question I have for you today is, do you have any other advantages of commercial opposed to residential, or vice versa? Maybe you could share that in the comments below. Thank you guys so much for watching this. I really appreciate it. Like this video, subscribe to this channel only if you enjoy being a part of this community. I definitely love giving you guys a lot more information, a lot more tips, and I'm always open to answering your questions or having questions on your deal. I'd love to help you out. Thank you guys again. Enjoy your week.